Good evening and welcome to Africa Business Weekly, your wrap of the top business stories from across the continent. I'm Karabo Mashaba. Coming up on the show today, we reflect on the latest Nigerian central bank decision and get expert analysis into the policy rate path for the remainder of the year. And Rwanda has raised 24 billion Rwandan francs to boost its capital market growth. All this and more throughout the show. Of course, I'm not alone. I'm joined by my colleagues David Alabi and Tabitha Muthoni. But let's head over to Lagos, where David will take us through the key business news in West Africa this week.
Hello, Karabo. From the West African region now, analysts believe the Central Bank of Nigeria is likely to cut interest rates at its next Monetary Policy Committee meeting in September. Now, according to Bismack Rwani, the Chief Executive Officer of Financial Derivatives, Toyisani, CEO of Emerging Africa Group, and Gregory Cranston, a consultant on African economics, the CBN's recent decision to hold rates reflects a cautious approach to policy easing. They also note fiscal and monetary goals are to be aligned clearly.
My view was that we would see a 25 basis point cut, about 70% probability and 30% holding. Now with these GDP numbers out, I think it's almost equal. In other words, I think that we might see a 40% probability that they'll be cut by 25 basis points. And there's a 60% probability that they hold to wait for other steps being taken by the Federal Reserve, by the Bank of England and others, because we are not living in isolation. So that is what I believe is likely to happen. But all said, there's a lot of political pressure to ensure that the growth and the GDP numbers and the data that's coming out can translate and can actually trickle down to the rest of the economy. So if I'm going to be going by the political weight, I would say almost certainly that there will be a cut. If I'm going by the independent and autonomous attention and what should be done prudently, I would say they will hold until September. But how long are you going to be holding? That's the point.
All right, so you're leaning more strongly on the hold. Let me get other comments here. Let me bring in Toyisani here. Inflation is easing. We're seeing food prices moderating. External reserves have risen. Is that enough for a rate cut, in your opinion? Toyin?
Rate cut, because we do need to take decisions that will stimulate the long-term growth of our economy. And the rate hikes, whilst they have been good in terms of managing inflation, from a monetary policy perspective, they have been good, but they have also had an effect or an impact on the larger economy in terms of the opportunities to grow and for businesses to access funding at rates that are more pro-development and more affordable. But I think that the MPC will probably hold one last time and then be looking at Q4 when they can begin to gradually ease. And so I think this hawkish perspective approach will hold a little further. But I think it's good news that inflation has moderated. I think it's good news that we're seeing more stability also in terms of the foreign exchange. But I think they're going to push for a little more. Inflation is still above 20%. So, I mean, it may be good, but it's still high.
Maybe good, but still high. But Gregory, let me bring you in here. And I'd love to get your opinion on what the true cost of maintaining an NPR at 25% is. First on credit, growth, and even investment into Nigeria.
I'm expecting a small cut. But to answer your specific question, what's the impact? Well, on growth, it has to be slowing growth down. On investment, well, it depends what sector you're talking about. And on credit, similar to growth. But look, I mean, the rates are too high, but they've been high for good reason. There is some light now to sort of look at the end of the famous proverbial tunnel. And, if you look at, I think if you go back to the last MPC meeting, the verdict was, we need to better understand the near-term developments. Well, the near-term developments since then have been broadly stable, the
Next up now, Nigeria has also hit the refresh button on its economy with the rebasing of the gross domestic product, using 2019 as the new base year. First quarter data shows a 3.13% year-on-year growth, putting nominal GDP at 94.05 trillion naira. Now, for the full year of 2024, the GDP climbed 3.4% to 372.8 trillion naira. One key shift, well, the debt to GDP ratio eased to 39.4% in the fourth quarter of this year, thanks to larger economic base. Now, Tilewa Adebajo, the Chief Executive Officer of the CFG Advisory, and Charlie Robertson, the time-traveling economist, unpack what this means for the real economy and the path to stability.
A lot of the things we'd seen before in terms of the growth of the Nigerian economy was that the GDP trajectory was on the decline. Our GDP was close to 600 billion about 3 years ago. And with the devaluation, extensive devaluation, which occurred in the last 2 years, it was clear that our GDP figures would not exceed around the 200 billion mark. So when the rebase numbers came out, I think it wasn't really too much of a surprise. But at least we've done that exercise. And we now have a new base figure of 2019. And I think we'll work with that. But I think the growth figures, reveals a more important story. Fourth quarter GDP was 3.8%. First quarter GDP is 3.1%. So the GDP growth is actually on the decline, and that's really a source of concern.
All right, let me bring in Charlie here. Charlie, your take on the numbers. Are we seeing real growth here, or is it just a play on numbers?
Firstly, I like the fact that the rebasing wasn't what we saw in 2014. 2014, it was nearly 100% increase, and the great pride was taken in the size of the economy being the biggest in Africa, but it didn't reflect the ability of the government to collect taxes. It didn't improve revenues. This rise of 30% was eminently realistic. The way I think about it is per person. And in Nigeria, the official figures until last week were the per capita GDP was $800 in Nigeria. Now, I know the currency got hit incredibly hard last year, but that was not realistic. And we're now at $1,100, which is much closer to Tanzania, Uganda, the sort of peer group that Nigeria's average per capita GDP is at. So I think we've got much more realistic numbers now. And I think that's helpful. I think the 800 figure we had before was just way too low.
All right, because numbers are good for policy making. We plan to have these data sets coming from time to time to aid planning there. But in terms of policy response, looking at what was in play, we just saw the MPC make a decision on interest rates just yesterday. I'd love to get your take on what this means going forward for policymakers.
Well, I think what's important is the fact that macroeconomic reforms and stability, I think we all have the consensus that we have some level of economic stability right now after 2 years of reforms. But after 2 years of reforms and economic stability, that's not enough. That by itself is not enough. You need to grow the economy. An economy of 200 million people with Nigerians has to grow at least at 8 to 10% on a sustainable basis for you to lift people out of poverty. Even the GDP numbers you're talking about at 1,000 is very disappointing for a country like Nigeria. The high of our GDP per capita was about $3,200 about 12 years ago. Now, considering the devaluation of all that, what it means is the fact that you've impoverished Nigerians. More importantly, also, we're dealing with a strong inflationary environment. And the central bank is trying to go through an orthodox monetary policy to be able to go through some disinflation. There are still challenges, and as you can see, the central bank and the monetary policy are not yet confident enough to begin to cut rates to be able to stimulate growth. So until we tackle inflation, we cannot begin to address the issues of growth and the structural reforms that are necessary to stimulate growth to the levels that are sustainable for the size of our economy.
Well, that's it from my desk here. It's back to you now, Karabo.
Thank you for that update, David. Now, let's shift gears and head over to East Africa. It's over to you, Tabitha.
A very good evening to you, Karabu. The International Finance Corporation, IFC, issued a 24 billion Rwandan francs bond on the Rwanda Stock Exchange, its first onshore franc bond in over a decade. The 8-year Umuganda bond, carrying a 10.5% coupon, was oversubscribed by 1.75 times, attracting pension funds and banks. It's part of IFC's continued push to deepen Rwanda's capital markets and support digital infrastructure. Here is more.
That's a great and a significant achievement that we've been able to complete this bond. And I think a lot of kudos has to go to Rwanda, who is really reaping the benefits of a smart mix of policies and investments over the last 20 years. So Rwanda has a remarkable economic transformation, which is underpinned by sound fiscal management, low inflation, and also some very significant investments in infrastructure, health, and education. So all of those reforms have fueled Rwanda's growth, close to 9% real GDP growth last year. And we believe that this strong, stable environment makes Rwanda a highly attractive destination for local and international investors. So this is one of the main factors that motivated IFC to issue the Umuganda bond. We saw a clear opportunity also to support the development of local capital markets. And for us, it's more than, accessing a local source of currency that we need in order to support our growth and our projects in Rwanda, but it's also a way to build Rwanda's capital markets and open up new investment opportunities. So we do hope that this bond can have a demonstration effect in the market and also bring others to tap into Rwanda's capital markets.
All right, quite interesting and positive analysis there. And looking at the anticipated participation by investors into the bond market, and what would be your insights around how this is likely to attract investor interest into the country, and of course deepening the capital markets at large?
Yeah, the demand for the bond has been very strong. It's been 1.75 times oversubscribed. The bond's coupon is 10.5%. It's 55 basis points below comparable government yield. And it's also a bit of a unique product because it gives access to local investors to IFC's AAA ratings. So for me, the lesson there is that there is appetite for different types of products to be brought to the market. For example, sustainability or green bonds also are an avenue for market development. So there is interest from domestic investors, be it institutional or retail investors, to have access to a broader range of financial products. So I think that's the main takeaway from this exercise as well, and the enthusiasm around the offering with the oversubscription.
All right. And looking at Rwanda as a country, what would you say in regards to the readiness of the country when it comes to seeing untapped opportunities, especially in the capital market space?
Yeah, I think, Rwanda, like many other countries, are at the time where they need to think about how to use capital markets to fuel their long-term growth and access to finance. So for me, I think there are three, I would say, issues that I want to bring to bear around their readiness. So first of all, as I alluded before, Rwanda has established a very strong foundation with sound macro, stability, clear regulations, and ongoing reforms. So kudos to the government of Rwanda for delivering that. Second, I would also highlight a strong ecosystem. You have the players such as the Rwanda Stock Exchange and the Kigali International Financial Center that are supporting capital market development and attracting investment in the country. So having that sound ecosystem is quite important to the success.
Kenya is welcoming the world as the great wild beast migration returns to the Masai Mara. President William Ruto officially opened the season, marking one of the planet's most spectacular wildlife events. With over 1 million animals on the move and visa-free access for tourists, Kenya is aiming to turn the migration into a major tourism driver. Let us listen in.
A very diversified tourism product in Kenya, from the wildebeest migration here, to the wildlife tourism product that we have across Kenya, the Big Five, and many bird watchers and many other animals and wildlife that you have the opportunity to sample while you are in Kenya, to the culture of the Kenyan people, the warmth, the hospitality, as I have said, of the Maasai people, and the Kenyan people in general, the culture, the customs, the tradition that blends with the spirit of Kenya. The most important aspect of this land is that people don't visit Kenya. They come back to Kenya because this is the home of humankind. This is the place that all started. This is the home of human origins, right here in Kenya. And I'm going to showcase to you next time where the earliest remains of the first man on earth are, in the Republic of Kenya. So when you come back to Kenya, you're coming home to reunite with your spirit, with your soul, with the soil where humanity began. We are kissing our beaches, as I have said, beautiful sandy beaches, our savannas. The two tallest mountains in Africa are right here. Kilimanjaro is at our border. Mount Kenya is right in the heart of Kenya. And everything in between. We are an interesting destination that you can combine leisure with business. This is also the hub of innovation, where you can travel as you sample products of innovation. This is the home of ICT. This is the home of the M-Pesa revolution. This is the home of our athletics prowess. If you want to run with Olympic champions or world-class champions, you come to Kenya. You will meet them in the streets. You will meet them in the walkways. And this is the place to come. And that is why we are expanding our tourism product to go beyond wildlife, to go beyond our national parks, to go beyond our beaches, to the wide array of what Kenya is good at, wide array of what Kenya has, from our deep culture to our great innovations, and to welcome everybody from wherever they come, from America, from Europe, from Australia, from Asia, from China. We will welcome them with open arms and tell them, welcome home, because this is where we all began. Our tourism numbers are going up. As I said, by 15% last year. We moved our numbers from 2 million visitors to 2.4 million visitors. Our targets are 5 million in the medium term, and we believe that is achievable because we are also expanding our other facilities that we are going to use for conference tourism, for sports tourism. As you have seen, we have huge investments in stadia and in sports infrastructure around Kenya.
That's it from the East, where markets move and nature puts on a show. Back to you, Karaba.
Very insightful conversations. Thank you for that update, Tabitha. Well, down south this week, the South African National Roads Agency signed a 7 billion rand loan agreement with the New Development Bank to support its various toll portfolio projects in the country. For more on this, CNBC Africa's Nastasia Arendse spoke to Sanwell CEO Reginald Damana.
We are the National Roads Agency, which means we are responsible for the planning, the design, the development, the financing, construction, maintenance and rehabilitation of any road that is declared a national road. Currently in South Africa, our mandate is about 4.4% of the total road network. So we are standing at somewhere in the region of 27,500 kilometers that we manage. But of course, the importance of this 4.4% is that it is responsible for about 32% of all annual traffic, vehicle annual traffic kilometers traveled, as well as about 70% of all freight. So you're talking about long distance trucks on the roads. So it's an important part of the entire road network in the country.
All right, so let's get into the actual portfolio projects that you believe this loan agreement will support. What are those at this point?
We run two portfolios, the so-called non-toll portfolio, which is funded from the national fiscus, as well as the toll roads, which we fund from revenue collected in toll revenues, as well as monies that we raise from funding institutions. And of course, another part of the tolls will be concessions. Within that toll portfolio, we have not been able to raise funding for a significantly long period of time because of the e-toll debacle. But last year in 2024, we finally resolved that. Our historic debt is taken care of by government. And of course, they approved new borrowing limits that will allow us to go to the market. We are now looking at a portfolio of projects on the N3, so that's the main economic corridor to Durban, as well as another set of projects on the N1 South after Bloemfontein on your way to Cape Town. We do have other projects in the portfolio on the N2 in KZN, whether you're going towards the north to the airport or south down to the old airport, as well as N1 North to Beitbridge. So that is after Kranskop, that we are looking at developing. So we'll be raising funding, we'll be using some internal cash to really push ahead with projects within that portfolio.
I want to go back to what was mentioned in the statement, not just by yourself, but also by Mahesh Fakir, who is one of the board members for SANRAL. He talks about this particular loan being very impactful, and because it will emanate from what he describes as long overdue funding. Talk to me about some of the challenges you've had to go through as a result of the inability to raise that funding. And I think you touched on one of them. It was that e-toll debacle.
Yes, indeed. So you will imagine since 2013 all the way until 2023, we haven't really been able to do much because of the e-toll debacle, which meant that a lot of roads within the toll portfolio were not able to receive the necessary expansion, the necessary strengthening that was required.
In an interview with CNBC Africa, South Africa's Minister of Corporate Governance and Traditional Affairs, Velengosini Hlabisa, outlined an ambitious plan to rejuvenate the country's local government infrastructure. As he discussed the state of South Africa's municipalities, he emphasized the crucial role these local government entities play in the country's broader economic and social fabric. Let's listen in.
The Ministry of COGTAM is in a program of fixing the local government system to make every municipality work. What makes this becomes a matter of urgency. If municipalities are functional, the country will be functional. If they are not functional, also the country will not be functional, because everything in South Africa exists on a local government space. Could it be a business? Could it be a government institution? Could it be an individual person? Everybody lives in a certain ward in a particular municipality. Municipalities have an obligation to give water, provide clean environment to our communities, ensure that services are provided to make a conducive environment for business people to invest in order to grow the economy, which will eventually create job opportunities. So now, our program, unfortunately, where we stand, we have a bigger number of municipalities who are performing below accepted standards. We have categorized them into functional municipalities, into risk municipalities, and into dysfunctional municipalities. We are focusing more on dysfunctional municipalities in order to make them move from a state of being dysfunctional to be able to provide services.
Sure.
We concentrate on the staff, the employees.
Yeah.
Because for a municipality to be functional, you need competent staff. From municipal manager, Section 56 managers, as well as the support staff.
Yeah.
But above that, you need a political leadership that has capacity in the person of the mayor to give leadership and direction, as well as strategic direction for a municipality, for the officials to support that strategic direction.
Right.
We concentrate in providing capacity, especially to deep rural municipalities, because they are unable to attract specialized skills in the areas of engineering, CFOs, and other technicians.
Yeah, and I just pick up on the point you made about the distinctions that you are making around those municipalities that are functional, those that are at risk, and then the dysfunctional ones. And you said a large number are dysfunctional. I just wanted to understand from the work that you have done, what percentage is in that category? And if you are able to just break it down a little bit for us.
It's about 60%.
Sure.
That is not at a functional state. And that is where the majority of people are, and that is where the majority out of 257 municipalities are. And that is where we are putting more focus while not neglecting those that are at risk of falling into a category of dysfunctionality and those who are at a functional level not to backtrack.
And those were some of the stories making headlines down south this week. This is where we draw the curtains on this episode. Thank you so much for joining us on Africa Business Weekly. You can, of course, catch all these stories and more on our website, cnbcafrica.com. But until then, stay watching CNBC Africa. I'm Karabo Mashaba.